afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. We can now go through the structure, as I said, of the webinar. So to begin with, I would like, just before I will explain about the webinar, to say that this is a live questions and answers, okay? It means that regardless the subject that I'm teaching, you can ask whatever you want and I'll paste your questions down here. Okay, we have a whole segment just for that. Okay, on that slide. Primarily, we will begin with the previous questions, which are questions written here. And then, like I said, at the following part, we'll have the dynamic questions, which are questions that you guys will be asking along the webinar. This bit here is more informative, just to save you the trouble to find those things on the website. Although there are many shortcuts for the academy as example, and for the education as an example, those can be found on the WebTrader as well. But just for somebody who is not using the WebTrader, those links are useful. This bit here is more, again, to use it as an example to explain about analysis. But as always, you guys know that we're getting questions regarding to analysis anyway, and I would rather to cover that part on the chart with live data and not using the example here. Okay, so we have, like I said, previous questions, dynamic questions, this bit with the links, and the analysis that we can perhaps use to show you some examples. And any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, we understand that sometimes people are joining late and sometimes you would like to review the webinar just to see it in your own time. And I'm happy to tell you guys that the webinar is recorded. Well, not just this webinar, all the webinars that we're doing, I hope they are recorded and uploaded to YouTube, okay, later on, which gives you the privilege to just go to our YouTube channel, pick the video, the webinar you would like to recap, and then you can watch it in your own pace. There is a question here from staff. Will the link of the recording will be sent? I wish, staff. You have no idea the amount of clients asking for that link, but the problem is that the link to the webinar is not something that we have right now. We have to, the webinar is recorded, we have to process it, to upload it to our channel, and then there is a link. But we cannot send the link to the webinar's recording because it's not there yet. I hope it makes sense, unfortunately. But you can go to our YouTube channel and just watch it there. I'm sure there is a way to download it, but I'm not there to. I don't want to explain to you, and I don't know how to do that. Anyway, let's begin. Like I said, we're going to begin with the previous questions. Let's just go one by one and understand what's the order that we are going to answer them. So the first question is how to find a good entry. That's excellent. Okay, there is another question here from Zizifo. Hi, I would like to know more about mirror trading and how to register to it. Okay, that's an excellent question. Let's paste your question down here, sir. That will be our first question coming from the audience. Okay, let's see, we have another one here from Raj. Can you please demonstrate how to create support and resistance line, Fibonacci lines, SMA, EMA, all the other charts indicators such as Bollinger Bands? First of all, thank you for the question. Of course, I'm not sure that I'll be able to apply all of them and explain all of them on the chart, but I will definitely do my best to give an idea at least how to approach. But again, there's no guarantees that I'll be able to show you everything currently. Okay, thank you guys for the lovely questions. Let me just put that down somehow. Okay, so it doesn't bother us. Maybe this way. Yeah, All right, very good. So as I was about to, oh, okay. All right, that's good, that's good. So the first question, as I said, very simple, how to find a good entry, that's amazing. Second question is, what is the recommended exposure to work with? The third question is, what are the differences between short, mid, long-term trading styles? And how frequent, which is the fourth question, how frequent should I modify my strategy? Which are the exactly type of questions that we love the most. Why? Because that question is depending on the trader, right? It's always about how available I am and how professional I am. And if I'm not okay, well, we'll get to that. We'll get to that. Let's see what should we begin with. I like to begin with a question that leads to another question, and then we keep focusing on subjects that keep teaching us more. And I think that, you know what, let's just begin from the entry. I think we can go from here to here, and then we'll see. Okay, first of all, let's understand what is an entry. And before we do anything, let's understand what is this and what's happening up here. There's a question here from Ayan Faris. Can you please demonstrate copy trading and as well details of AvaSocial and Zulu trading? Thank you. Yes, I will. Let me just first take your question and quickly. Yeah, that doesn't work for some reason. Let me try again. Maybe now. Ah, there we go. But I'm a bit bothered that everything is bolded, right? Let's just make it regular. This way, I don't know, it just feels a bit different. There is a question here. I know nothing about trading. How do I know you are a company to use? What are the people asking here? Is like foreign language. Steph, believe me, even even myself, when I started, this was a foreign language to me as well. So the people asking the questions above are just people, a little more experienced. Yeah, this is very, very encouraging. Thank you. Can you? There's a request here to double my speed. But if I'll double my speed, will people understand what I'm saying, or it will be a bit too fast? Let me take it slowly, and then you can watch it with, the double speed. All right. So let's like I said, let's go one by one. Our question is how to find an entry, and we are now looking at AUD JPY. Let's get ourselves something a little more physical to analyze, maybe. Oh, that doesn't look too bad. Yeah, we got copper here. Already we have some nice lines. I think I might want to get rid of those lines and place it from the beginning. All right, let's have a look at that. Let's place some lines. Okay, just to have an idea. How to find a good entry. Who knows what is entry? Okay, when I open a position, I aim for a certain value, right? That means right now, I'm looking at copper sitting at 4.1, and I've placed a line at 4.2, 2216, and one at 39250. Now, what exactly entry means? Let's suppose I would like to enter now. does it mean? Means that I want to buy at the current price that I'm at right now, or to sell at the current price that I'm at right now. Now, what difference would that make if I do it now, or I do it at, let's say, flat 4? Okay, let's mark it in white and also name it. Okay. Now, what difference does it make if I enter here, where we are at right now, or I enter here at $4? What is the difference? It's 1 cent. Does it make any difference if I enter here or I enter here? There is a difference. Okay, Freddie. Okay, that's nice. But still, my question is, why can't I just click here buy, and then if it goes higher, I make profits? What's the difference if I enter here, or maybe here in the pink line? What difference does it make? Take the entry. They give more time. Okay, okay. The main reason that I would like to optimize my entry is the amount of the price difference that I would like to grasp. So for instance, those are 2 levels that I have acknowledged as support and resistance. We have higher levels than that. We have that one, we have that one, we have that one, right? Those are resistance. There are different support lines here. But if I buy here where I'm at right now, my next stop is approximately a 4.2, right? Let's do it this way. And in here, okay, so from here to here, there is a difference of 1 cent, right? It's $4 per ounce now with copper. Okay, and if I have 1 cent and I have 100 units, I'll be making how much? Who knows? Let's simulate this way, then we get a precise number. Correct, exactly, $10. Now, what difference does it make if I do it from here to here, or I do it from the white line to the, because that's going to be the same 10 cents, right? Yeah, it's going to be exactly 10 cents from here to here or here to here. What difference does it make? Why would I enter at the let's make it, okay, so this one, let's make it green or something. Okay, why would I enter here and not where I'm at right now? I want you guys to see here, you see that there are 2 bearish, 2 negative candles. Okay, 2 red candles maybe. I don't want to call them negative. You enter below, you can make more money. Not necessarily. Not necessarily. That's exactly the thing, Jeffrey. And people here said the same. It's not necessarily that if I'll enter below, I can make more money. Because again, look, the 10 cents difference, the 1 cent difference between here and here, it's quite the same, right? It's not really different. So I'm gonna make the same amount if I'm gonna get from here to here with 100 units and from here to here. The difference is there are certain levels that I have in mind thinking that copper might turn around. And if I enter here, I have no indication if it will turn around in here, if it will reach all the way in here, or maybe it will turn around before. If I'm planning to buy in here at this price, I see that 2 days ago it's been on that level. The day before it's been on that level. And a few days before, anyway, the point here is that statistically that level is potentially, for me, it might be a good entry, because this whole area is a whole consolidation area. Let me capture it a bit more clearly with a rectangle for you guys to see. And now we're quite in the middle. So if I'm planning to grasp 1 cent from my entry, I can definitely do it here. But if I'm with a buy, I know that my target price is somewhere on the resistance. And I'm not sure if it's going to get here or it will turn around before, because as you can see, there are many times that it didn't reach. Only in this particular point it reached. But if I buy in here and I'm planning to get 1 cent difference, I see that at least from what I get from here, it's more frequent to get in the range of the time frame that we're looking at. Okay, if I compare it to the last time that it's been on that, it's been there on the 1st, which was 2 weeks ago. And the difference in here, 1 cent, can be found even 1 day different. Okay, does that make sense? So we have 2 weeks until that price, and we have approximately 1 day between candles if I compare my entry to 4 to 4.1 instead of 4.1 to 4.2, which is here. Now, this is obviously one way out of many, many ways, but it's not a bad way, okay? So how to find a good entry? One of the ways is to compare between different levels of support and resistance and finding the best place to open a position, getting the price difference we aim for. Okay, of course this exercise can be done in a bigger time frame, in a smaller time frame. Still, it's going to work the same way. Let me show it to you, even if I switch to 1 hour. Okay, still we can look at the highest point and the lowest point and still compare certain levels and to find a good entry. Okay. Right now, obviously, well, you know what? I don't want to get into it because it will take more of our time. But I guess you've understood the idea. Okay. This already breached. As you can see, whoever entered here really took a nice position. Okay. Let me get that. Paste it down. Okay. Second question, guys. Making very nice progress. What is the recommended? Do we have any questions, by the way, about the previous? Do we have any questions about the entry, guys, before I carry on? I'm going to give you 10, 20 seconds to ask whatever you want. If you would sell, you would enter at the top. Could be, could be. Thank you, Daniel. So Daniel is asking if this would have been a sell, would you enter it from the top? It's very probable. I'm not, that depends on the case, but often, yes, we try and buy at the bottom and sell at the top. It's not always the case, but if I would make this comparison, it would make sense. Yeah. Okay, but it depends on the case. But yes, in general, yes. What is the recommended exposure to work with? Okay, so exposure equal possible loss amount out of my balance. example. Okay, 10,000 in balance. Okay, let's say possible loss. I'm going to show you now an example of, let's say, 375. Okay. What is the exposure? Let's suppose this is my only position, right? Let's suppose that I'm going to take a position here with, you know what, let's not take copper. Let's take something else. Like, let's take one of the currencies. Let's say that we are with a buy, and let's add okay. This is really not something that you guys need to know. I'm just doing it quickly, so I won't need to waste time on the explanation. Okay. And now we're looking at potentially this will keep on moving. So 375 is not something we can commit as long as the market is open, and it will keep changing. Okay. But okay, in this case, we can take 0.1 with Euro USD. As you can see, this is the primary currency. So this is how many dollars I need to have 1 euro. And I've simulated here, I've increased by 375 pips from the current price. And this is my possible, oh, sorry, this is my possible loss. And I should have subtracted it from the, let's take the current price. I was looking at the profit, but when we are buying, that means that the loss needs to be in a lower value. Okay, let's increase that a little bit. Sorry. All right. Now, in this case, we understand that the possible loss here is, let's round it up a little bit. We have to take the spread in consideration. Okay, the possible loss here is 380. Let's make it 380. And I want to know what is the exposure out of the account. My balance is 10,000, right? And I'm looking at potentially lose 380. So what is my exposure on this position out of my balance? I have a balance of 10,000. How much in percentage I can lose only on that position? All right, so 38%. No, this is not 38%. Sorry, Will. We're gonna do it together. It's 38% will be 3,800, but I almost gave you the answer, so I'd rather we do it together, okay? Our equation is very simple. Possible loss divided by balance equals X and then x times 100 equals exposure. Meaning 380 divided by 10,000 is how much? Who knows? 0.38. Okay, it's a very nice guess. Let's do it. Let's have a look at it together. Almost. You are very close. And if we multiply that by 100, 3.8. Okay, so Will, it's not 38%, it's 3.8. So 3.8 is out of 10,000. Now, what is the recommended exposure to work with? I have to be honest with you guys, there is no exact number we recommend to work with, because some people like to work with high exposure, 5, 10, 20%. Some people like to keep it conservative. They keep it around the 1%, 2%. Let's see, there is a question here. Hi, would you rather not use lines on the chart rather than changing stop loss, take profit in the numbers? Well, that depends. Look, the take profit and stop loss are placing it quite dynamically because they are depending on few things. I can just randomly place it here and place it here. It needs to have some certain reason, some certain agenda. Like I said, if I'm placing it here, it's because this is the resistance. I can place it here as a support. I can perhaps, I'm not just randomly placing lines. And changing here the numbers is to adjust it. You see that even if I changed it, it keeps moving, so it doesn't really matter. Even if I'll make it 375 flat, it's still gonna keep moving. So there is no point for me to try and keep it this way, unless I'm using something called execute when price hits, and then I bound my position to begin only on that price. Okay, if I click here buy, it's gonna buy where it's at right now. If I'm clicking buy and this is marked, it's gonna launch automatically the position when the price hits. That's why it's called execute when price hits. But I'm happy you asked. Listen, you guys should know something. If you're not gonna ask me, this is not a webinar for beginners. I keep going, okay? So it's good. It's good that you're asking me to know better and understand what I'm doing. But I hope that the pace is okay and I'm not going too fast. Steph, how are you holding? In the beginning, you stated you have absolutely no idea. How are you feeling right now? Does it make a little more sense? Let me get rid of that for now. And what I was about to say about the exposure. So listen, what I started to say is everybody has their own exposure factor. Just know that the higher your target is, no, I don't want to say that. I don't want to say that because you can change the ratio and that's not always depending. So there is no recommended. That depends on the strategy. What is the recommended amount? There is no recommended figure defining the exposure. Okay, exposure is based on strategy and a valuable margin. Okay. What are the differences between short, mid, long term trading? Something here. Let's do it this way, I think. Okay. Short, mid, long term trading. Okay. What is the difference? What are the differences? So it's quite, you know what, let's keep it simple. I don't want to complicate anything. So we have short term, let's name it, let's explain about scalping. I think it's the easiest. Midterm, you can say intraday, weekly, and we have long-term. Can somebody give me a name of a strategy, long-term strategy? We have scalping, intraday, and what else? Who knows? Long-term, long-term. Whoever is experienced. Thank you, Charlie. Swing, very nice. So that's correct. Swing is one of the strategy we're using for long term. It's more of a trading style than a strategy because in swing there are thousands. What are the differences? Scalping, of course, you have a lot of entries, and I don't want to put it this way. When you're scalping, you're basically face-based trading. You're opening a lot of positions at the short time. Could range from 5 to 10 to even 20. It depends how you can manage. Even more than that is possible. You have what is the pros and cons? Let's say pros and cons. Okay, pros. You have many chances to buy or sell or hedge. Okay, cons, you need to be on the computer. Okay, to scalp with pending orders, I'm sure people do that, but I didn't see many. Okay, I didn't see many people using pending orders to scalp from a simple reason that scalp is, as I said, face-based trading. And if I'd be scalping, I'd probably wouldn't analyze days or weeks, but I would go for maybe 1 minute or 5 minutes. And as you guys see here, there's no point going for something too consistent because the market will keep on changing anyway. Right? You'll have to be a genius to understand. Where is our, there we go. Okay, things are happening as we speak. Those are 5 minutes candle. Okay, and if I get rid of the rays coming out of the things here, you're just going to see quickly that the trend here is drastically changed in the past few hours, from bullish to bearish and then bearish again, right? Bearish, bullish, still bullish, bearish, bearish again. All right, and we can see. So this is scalping. This is like I said, face-based trading. You have a lot of chances to buy or sell and make a lot of money quickly, but that works the other way around. The cons are you have to be on the computer, because if you go and make your T and you have 20 positions opened, and how can I put it gently, it didn't go as you plan, by the time you'll come back with your T, your account can be already gone by then. So when scalping, it's advisable to be on the computer and monitor what you're doing. Midterm, intraday, weekly. Okay, pros. What are the pros, guys? Intraday, weekly. That means that I can typically hold a position for a day, even a few days. What are the pros? Do I have as many chances as somebody who was scalping? What do you think? You can still find, thank you, Chan. You can still find good entries and okay. But if I'm looking overall in intraday weekly, the main advantage is that I can do that without to spend a lot of time on the computer. I'm still gonna need to do analysis, risk money management. I can just go to the computer and randomly click here, buy, right, or sell. Still have to do some things, but it's not as demanding as scalping is, to my personal opinion, because with scalping, I'm practically on the computer doing things, and intraday weekly, I can just place pending orders and let it do run by itself. So I'd say less. Let's put it this way: pros would be doesn't necessarily requires me to be on the computer. Can work with pending orders. The cons, I'd say, let me think of something negative using the strategy. Let's say positions can take more time to get to their destiny, or conditions may change. No, but that applies for the others as well. Honestly, I can't think of any cons in that regards, but I'm happy to write it down. If you guys have any idea what could be a negative, it's not really about negative and positive. It's more about the differences. And the main difference is it's just more midterm versus short term. There is no really negative, anything negative using the strategy. Long term, from the other end, is let's say the pros again. It's doesn't necessarily, I can trade even less than even less than in here. But the cons are that I don't have a lot of control on my position because they're long-term based. Strategy, that is more long-term based, requires me to wait until I can modify the strategy. And why is that? Why is that? Because if, for instance, I'm swinging with NVIDIA or with Tesla or with Apple or anything else, and I'm waiting for a quarterly report, or in my strategy I have 4 or 5 stocks, and then I'm just waiting for something to happen, there is almost nothing in my ability to change with my current strategy, because the positions are already opened, and if I have a good entry, I'm just going to wait. I don't have any other. I can open more positions, right? In the middle of the week, I can open it on daily basis, but then I'm not, it's not called swing, if it makes sense. When I swing, I open my positions, I let it float, I visit it after a while. I can monitor it every day, and I can watch my positions like a TV show. But at the end of the day, I don't have as much control as if I would be scalping, because with scalping, I'm practically open and closing the position on the spot. With midterm, again, tomorrow I can go to my position, see if I got what I wanted, I can get rid of it, no problem, then I can carry on with ease, I can modify my strategy. When I swing, I open my positions, I go away, okay, again, I can monitor, but I don't really have to. I hope it makes sense. Let's take it all. Of course, I can fill here the list with God knows how many more stories about those strategy trading style, but there is really no need. My point here is to give you the idea. Oh, but that doesn't look too good. Let's try and minimize that, maybe like that. And that guy also. Problem is that I don't have a lot of space, but I think we are in the, yeah. I wish I could quickly make a chart here and just put it in columns, but I just don't want to waste any time on that now. Just want to give you as much as content as I can. Yeah. Okay. How frequent should I modify my strategy? Who thought about doing that? Modify my strategy. I thought a strategy is something that stays forever, right? You guys, what do you guys think? Are you modifying your strategy? Or like the question is, how frequent should I do it to modify my strategy? What does that mean to modify the strategy? What does it mean, guys? Let's say 5 positions, weekly, ROI. Let's go with 5% a week. Okay, again, this is an example. It's an example, guys. Everybody can put their own numbers. It's not even numbers that I'm always using. It's just as an example. Let's say the exposure here is, okay, let's extend it a little bit. Okay. Let's suppose my strategy is, and let's also state here a target. Target can be, let's say, $4,000 a week. Okay. Now, when do I need to go back and think about my entries and about my, my risk money management, and when do I have to go back and do that? Okay, do I have to do it every day? Do I have to do it every week, every month, once a year? What do you think? Once a day? Let's say A will be once a day, right? B, let's say once a week. Okay, C, once a month. Or D, once a year. What do you think, guys? When should I go back and review my strategy? How many positions I'm taking? What ROI I'm using? What do you think? If you succeed, you don't need to do anything. Well, Mina here wrote, if you succeed, you don't need to do anything. Okay, it's not bad. So what you're saying is, if this strategy works, I don't have to modify it at all. Not a day, not in a year. I just carry on with it forever and ever. Okay, we have Eric picking D, once a year. Alfred, you go for the first, once a day. Oh, modifying the strategy once a day. Oof, might be intense. What do you think, Mina? Well, Mina, you already wrote down, if it succeeds, you don't have to do anything, right? You don't have to modify. But unfortunately, I disagree. I have to say I disagree. Because even if you succeed, still, I think you can modify the strategy, but your idea by its base is not false. Mangitsu, you go for once a week. Okay. So all your answers are great. And Mina, believe it or not, I like your answer as well. If I succeed, I don't have to do anything, but not entirely, not entirely. Because if I'm able to sustain $4,000 a week, and in 3 weeks, it's, you know what, let's make it four, once a month, okay? If I'm able to make $16,000 a month with this strategy, why not to make more, okay? Or I can sustain it as it is. But at the end of the day, what I want to do is just to go back and see that everything makes sense. The exposure, I sustained it. The return, I sustained it. The amount of positions, I sustained it. 5 positions weekly, no more, no less. And I've reached my target. If all of this was fulfilled, I'm great. I don't have to change anything. I can, but I don't have to. If one of those things I didn't meet, then I can modify that and I can think, how can I go better? Okay. Of course, I took something that is a little, okay, let's put it this way, right? It's a bit more reasonable now for the average person. Okay, I can do it the way that I'm doing it now, but I can modify that if I see that things going sideways. So my answer to that question is very, very simple. I can modify my strategy if I feel that I don't, that I can't fulfill the conditions and guidelines I have set to myself. Very, very simple. There is no specific time length that I would recommend you to modify a strategy. And every day, I have to say, it's a little intense, whoever suggested it. So can you, okay, so we are done with that, right? Okay. How would you like to know more about mirror trading? Okay, so how do you register to it? Let's, if you don't mind, gonna get rid of that. Okay. Let's see what that means exactly. Do we have another question here regarding, let's go with that. Okay. Right. Copy trading. Okay. And why did I take both of your questions, guys? This and that. Because those questions are almost asking the same question. This question is asking what is mirror trading and how to register to it. And the other one, can you please demonstrate copy trading and as well detail of a social and Zulu trading. Okay, account A, let's say account A and account B. Okay, let's put it this way. Account B is beginner. Let's say $1,000 in balance. Okay, maybe a few weeks of experience, right? The second account will be, let's say, advanced. Okay, let's say 10,000 balance, 1 year of experience. Let me change the order here just so it will be a bit more understood. Okay. You guys will understand in a moment what I'm doing here, okay? Now, let's suppose that I would like to pick myself. I'm account T. Okay, that's or Dan D. Never mind. Yeah. What do you think out of the three here? So just to explain how it works, right? When copy trading equals link my account to another's trader account, and trading will be executed automatically. Now, when I choose, why did I put it this way? Who knows why I've lined up those different criteria to the traders? When I am mirroring someone or when I am copying someone, it doesn't matter if it's through AvaSocial or from ZuluTrade, even though the concept is quite similar. In AvaSocial, we can follow or copy someone. With ZuluTrade is auto trading. They're both automatic. Okay, with AvaSocial, if I'm following, none of my positions will be executed automatically. I'm just going to get notifications. But if I'm copying, it's very similar to ZuluTrade, and it's very similar to mirror trading. Mirror trading means that I sign a certain document that allows me to mirror the person that I am that I'm mirroring, basically. And whatever he's doing will have an impact, direct impact on my account, right? Also, when I have a mirror trading account, I can unify accounts under my account, and whatever I'm doing, all the accounts that was under my mirroring will enjoy the same conditions. Okay, I'm not going to expand too much about that. Whoever asked me about mirror trading, I highly recommend you to contact your senior account manager, and to that particular case, he can find you a solution. But now, again, my job is just to give you an idea of how it works. Now, if I prioritize, and I'm looking here at three different candidates, we have here an account that I can follow. Account A, $10,000, 1 year of experience, very nice. Let's look at the other one, also advanced. Let's say that this one we have a pro, advanced, and okay. Right. So who from the three would you pick to follow? The first one, the second one, or the third? Something here doesn't look right. Right? Who goes for the first? Intermediate, 10,000 in balance, 1 year of experience. Oh, sorry. That should have been the other way around, right? Half a year. This one is 1 year. 1 year. Yeah, that makes more sense. Eric, okay, that's absolutely understandable. Eric, you would go for the third. Mina, also the third. Okay, who else is going to pick C? Shannon, pick C. Okay, no problem. So everybody has commented so far that they will pick this guy, right? Anybody else? Anybody think otherwise? Anybody would pick A or B? Okay, Alfred, you go for C as well. That's good, that's good. So it means that my demonstration here is quite simple. Why all of us would go for a pro trader and not for intermediate or advanced? Because this half a year of experience, again, this trader might be great. This trader might be great as well. But this guy has traded for 5 years, and if he's a pro and he's working with $7,500 for 5 years, okay, obviously this could look a bit different. But what I want to do before I am copying or somebody or following someone, the most basic thing to do is to check the performances for the longest time frame that I can. If somebody offers me, okay, come, you can link my account, your account to my account, but I've been trading for a week. Well, how can I know if you're good or not? Or for a month, how can I know if you're good or not? Even if you've been lucky for I don't know how long. So I would want to look into that and make sure that the person I'm copying is is who I want to copy, right? That's the point of my explanation. So this question and that question is quite, I wouldn't say the same, but similar. That is not really a question. You can find by yourself. Whoever asked me that, as I said before, I didn't become what I am today on my first day. I was very bad at it in the beginning, very, very bad. Everything was very complicated, but as time goes by and you acquire more information, you practice and you get better into it. So don't be afraid to try, because if you don't practice, you don't get better at the end of the day. And the huge benefit we give is a senior account manager. So you don't have to learn everything by yourself. You can have somebody who is assigned on your file, giving you full support, analysis, risk money management. You can enjoy that. That's regarding the last question. Support and resistance, we didn't really get to that today, right? Whoever asked me that question, unfortunately, but we had to take care of the other ones, and I guess it's fine. Let's send you the links here, guys. We're gonna do that quickly. But before that, let me send you that so you guys can get your session from the senior account manager. Whoever stayed till the end, you got yourself a nice special promotion code. You can give your senior account manager Q&A benefit, and he'll know that you deserve a one-on-one premium market review. And I'm gonna send you some useful links here. Okay, just before we say goodbye. Okay. All right, and like I said, for the academy and the education, let me just show it to you from the website. You see that in here? See that in here? If you go to education, you have the academy, and click on academy, and you have the tutorials. See, which you can go down and you can enjoy a lot of free content here that can be very useful. All right, guys, we are done for today. It's been a pleasure giving you the webinar today, and I appreciate everybody who participated and answered the questions and asked the questions. It was very, very helpful and enjoyable, and I wish you all a great week, fruitful week, a lot of profits. See you in a week, and have a good day.